Beware folks, these 5 American cities that I'm going to cover in this video are already in a housing market correction, and it seems like things are about to get worse. Before getting into the data, I'm going to show you what the CEO of Redfin said this morning on CNBC, and I want you guys to listen closely to what he has to say.
For people who are used to the housing market being really stable, a good place to put your money, this is a real bumpy ride. Mostly we see this kind of volatility in the stock market, even in the bond market, but not in the housing market. And some of that's attributable to the fact that investors have become so active in the market. It used to be that investors were 1/10 of the home sales. Now we're up to 1 in 5. And that activity is falling fast. We've never seen a faster rate of decline in investor activity since Redfin's begun tracking it. In America, we worry about the price of gas and bread and everything except housing. When home prices go down, it's a calamity. But this will let more people own a home. Rents have been going through the roof. Home prices have been rising at unsustainable levels. I think a return to normalcy, where we have 3 to 6 months of housing supply, is actually a good thing.
And are we back to that normalcy, or are we getting close?
We are, but it's just such a wild ride to get there. So you've got 15 to 25% of the homes under contract being canceled in the past month. 62% of Boise homes have dropped their price. More than half have done so in Salt Lake City and Denver. So I don't think it's going to be a smooth landing. It's going to be a very bumpy landing.
Yeah, well, you mentioned 3 very hot or previously very hot markets, I would assume, where price appreciation over the last 2 years has been substantial. Is that your expectation in other markets? I mean, is it, to be expected across the board that, and we're looking at them now, that some of these incredibly hot places are simply cooling off, but are ending at a far higher level than they were even a year ago?
Absolutely. So the markets that were the hottest have the furthest to fall. If you look at Austin, Texas, I think the compound annual price growth rate is negative 42%. That's extrapolating from just 1 month, so it gives you a wild number. I don't actually expect home prices to fall that much, but it's still a doozy to see that much loss in 1 month. So
a quick sum up of what we heard from Redfin CEO. He's saying we're seeing the fastest rate of decline in investor activity. We can see price cuts all across America. About 15 to 25% of homes under contract are canceling. The markets that were the hottest are the farthest to fall, and in general, expect a bumpy road. This is bad news for the housing market in America in July 2022, and now we are going to see the top 5 cities with the highest percentage of listings with price drop. This is a huge indicator in my opinion, because price cuts are leading to a lower sales price, which will reflect eventually as official home value decline. And with that being said, guys, let's get right into the data. Ranked number 5th, it's Austin, Texas. Austin is one of the cities that during the past 2 years saw a massive migration, mainly from California, and home values have gone up substantially. By the beginning of the year, we had only about 1.5% of the listing in the market with price drop, and today in July 2022, we can see that about 11.6% of the homes in the market in Austin, Texas are with price drop. These guys can tell you a lot about the direction where the housing market in Austin is going, and this is about 8 times more homes with price drop than we had in the beginning of the year, only a matter of a few months. Ranked number 4th, it's Phoenix, Arizona, guys. Phoenix have saw a lot of migration during the past 2 years, and home prices have gone up in about 60% in just a matter of 2 years. We can see that in the beginning of the year, about 2.5% of the homes in Phoenix, Arizona were with price drop, when today in July 2022, we see that about 12.6% of the homes in the market are with price drop, and this is going to lead to a very lower sales price compared to the average right now in Phoenix. This is also a 9% increase from the same period of time of last year in the homes in the market that are with a price drop. In the 3rd place, Denver, Colorado, guys. During the past 2 years, home values have gone up substantially in Denver, Colorado, and we can see that during 2019, which is represented by the blue line, we would see between 5% to 9% of the homes in the market were with a price drop. Today, in July 2022, which is represented by the black line, we can see that about 13.3%, that's a massive number, of the homes in the market are with price drop. This is 7.5% year over year difference, and we are already above the pre-pandemic levels in the terms of price drops, and we are expecting to see more and more price drops in the near future. In the second place, Provo, Utah, and this is all the metro around Provo and Salt Lake, and we can see that we are way beyond the pre-pandemic levels we had, and today in July 2022 we are sitting with about 14% of the homes in the market with a price drop. This is about 10% year over year difference, and we can see that the inventory start to pile up. Sellers are getting desperate to sell their homes, which lead to a massive price cuts, and we're expecting this percentage to go even higher in the upcoming months. In the first place, Boise, Idaho. Guys, Boise is the city with the most price drops in America right now, and we can see we are way beyond the pre-pandemic level, which is represented by the blue line, and today we are sitting with about 16.5% of the homes in the market with a price drop. This is about almost 11% year over year difference, and let me tell you folks, Boise is not in a good place. A lot of people during the pandemic, when they were looking for a place where they can work from home with a nice weather and beautiful views, decided to move to Boise, Idaho, and now we can see that a lot of these homes are going back to the market. They are starting to pile up, and with that coming massive price cuts, and we're seeing it in more and more homes in the Boise metro area, and this number is even expected to go higher. Let's not forget folks, most of the homes in Boise are not affordable to the person who work and live in Boise, and this is actually a good thing if we are going to see more and more price drop, because this is going to lead us to a more normalized level in the market, but we do expect a lot of volatility before we are going to see that. A few more interesting things I wanted to point to you guys. This week, the National Association of Home Builders released the home builder sentiment, which represent the confidence home builders in America have in the near future in the housing market, and we can see that this sentiment have gone down to about 55, which represent a very low number compared to the other number we saw during the past 2 years, and this is the lowest number we have seen since the beginning of the pandemic. This is telling us, guys, that home builders across America are not confident that the housing market will keep booming. This leads to lower permits requests to start new building homes, and this is also going to lead to less supply in the market in the short term. Another chart I want you guys to take a look at, brought to us by Nick with Reventure Consulting. These represent about 46% collapse in home buyer demand, and we can see that builder home buying traffic index is also at its lowest levels since the beginning of the pandemic, and it's actually in levels we haven't seen since 2014, the year where we were still recovering from the great recession we had in 2008. And this is, again guys, not a good sign for the housing market. Another quick economic report we brought to us by the Boise letter is saying that home supply is up for the first time since 2019. This means that the housing supply in the market right now is suppressing the pre-pandemic level, and we actually have more inventory than we had before the pandemic. We also see the most tech layoffs since 2001 crash, which was the dot-com bubble. We also see that the average rent is up 5.8% in June. This is a year-over-year basis, and this is the highest increase we have seen since 1986. A lot of Americans also lost $3,400 in annual wages due to inflation, and inflation right now is at 9.1%, the highest we've seen in about 41 years. The recession is technically already here, and once we're gonna get by the end of the week the GDP report, we will be able to tell for sure that we are in a recession. One more thing I wanted to point to you guys, and this is just a nice fact to know. During the past 12 months, the term housing crash has been trending on Google, and we can see the top regions where people are searching for housing crash. And like we said, we can see it in Idaho, which is the first place in the nation right now in Boise with price drop. We can see Arizona. A lot of people are predicting that home values in Arizona are going to drop. Also guys, about 40% of the homes in Phoenix are owned by investors. Once these investors are going to panic and start selling their homes, we're going to see way more inventory in the market, more price drops, and eventually lower sales price. We can also see that a lot of people in Utah are searching for the term housing crash. That's all for today, guys. If you made it so far in the video, I encourage you to hit that subscribe and like button, maybe even share it with a friend. And in the upcoming videos, I'm going to cover the stock market. What are we seeing? What companies are going to report in the next 2 weeks, and how it's going to affect the market, and what it can tell us about the situation in the economy. Thank you so much for watching, guys, and I'll see you on the next one.